You recently wrote a piece explaining why you think the next crypto bull run will be like nothing we've ever experienced. In it, you note that the crypto market has been pretty boring due to asset prices traveling sideways for most of this year. You argue that still hope in the vision of the Federal Reserve's soft landing combined with the upcoming Bitcoin halving has the Web3 community, quote, salivating at the prospect of many life changing opportunities that could be within reach soon. Can you expand on your reasoning as to why you believe there could be a prolonged crypto rally in the near future? And what's your timeline?
Yeah, absolutely. First of all, thank you for having me on the show. Genuinely appreciate it. I would say that crypto has been rather uninteresting for quite some time right now. If you're not deep into the space, you're probably not looking at it as much, or you're not checking your Coinbase or whatever it is that you might use to check on asset prices, given they've been depressed for quite some time. But in the piece, I note that there are so many different features at play. The market is quite different than it was in the last bull run that we saw in 2019 into 2020. There was a quite different market outlook right now in terms of the maturity of the asset class, the amount of development that's been happening on some of these blockchains or alternative blockchains that have emerged since the last bull run. In addition, with those macroeconomic trends that we're seeing with in the general market, it seems to be the perfect opportunity for there to be, increased activity, and especially as the market starts to cure and flows start to come back into risk assets. I expect Bitcoin and a lot of other digital assets to, make that rally and extend, to new heights that we haven't seen before, given all those recent developments that we've seen over the last couple of years.
And it certainly will be interesting to see what transpires. But looking at Bitcoin specifically, the cryptocurrency has been trading in a tight range for months and hasn't been able to surpass the $32,000 level so far this year. Why do you think that is? I recently interviewed the CEO of crypto wallet Beam, and he argued that for the past few months, there haven't been many new retail and institutional participants coming into the market. And as a result, people have been trading with Bitcoin that they already own. Therefore, the cryptocurrency hasn't been able to move past that range of about $25,000 to $30,000. Do you agree with his argument?
Yeah, I mean, I think to a certain extent, absolutely. There's a lot to that, but even and from my perspective too, I think with all risk assets in all markets, volatility is where money or opportunities are made. And so, not to say there hasn't been any volatility over the last couple of months. We've obviously seen spikes here and there. Like you've mentioned, we've had trouble reaching or breaking through that support level or that resistance level. Sorry, of 32,000, and it has a lot to do with the fact that the money that's already here in the asset class has been rather invested. There's a lot of different stats and metrics that you could really look at, but the vast majority of crypto wallets, or a lot of them, are dormant, especially amongst people who are newer to the asset class and people that are that sort of that additional catalyst for general market upside pressure. And so, just given that there haven't been that many developments, that many consumer use cases featuring Bitcoin, as well as the general awareness, the public sentiment I call out in my piece about digital assets isn't particularly high either. And so when you think about where that new money might come from, it really, is, pretty few and far between. But we expect that to cure as the market gets better. Just generally over time, the American person is feeling strapped for cash these days. A lot of people are living paycheck to paycheck, and a lot of that speculative money that would come into the asset class hasn't been trickling in. But just as with any sort of market cycle, as we start to come back on the other side, the appearance of a soft landing or something thereof might obviously entice people to come to the asset class and seek greater investment returns.
So over the summer, we saw a wave of asset managers file applications for spot Bitcoin ETFs. That includes BlackRock, the world's largest asset manager. And just this week, four U.S. lawmakers sent SEC Chair Gary Gensler a letter urging the agency to immediately approve spot Bitcoin ETFs following a U.S. Court of Appeals siding with Grayscale over the SEC in its effort to convert its Bitcoin trust into an ETF. What do you think will happen with those filings for spot Bitcoin ETFs? And if those applications do get approved, what do you think will happen to crypto markets?
Absolutely. I mean, I think it's an amazing time for crypto just because I think it's a big step of recognition for those ETFs to get approved. And additionally, it's a large step in the right direction for getting people exposure to digital assets. I think one of the biggest issues with Bitcoin, or obviously digital assets as a whole, is the idea of self custody, because it's an idea and familiar, a behavior so unfamiliar to the vast majority of people. And so the fear of losing your funds or the fear of not being able to point at anyone, sort of the greatest aspects of Bitcoin could sometimes lead to the biggest friction points when it comes to expanding its user base. But I think the addition of ETFs as a potential mechanism for investment will allow it to be far more accessible to the vast majority of users who don't want to take on that operational risk of dealing with digital assets. As pertains to the idea of whether they're going to get approved or not. I'm no expert, just like nobody else might be, but I think what we are finding in the market is that there are fewer and fewer reasons for the SEC and the powers that be to not approve these ETFs. There's been a lot of mobilization within the community, within the ecosystem as a whole, within financial markets, and you're seeing this myriad of the amount of the collaboration between the world's the BlackRocks of the world who've ruled the world as it's been for however long, entering this space, which is a huge point of support and a point of legitimacy for digital assets. And I think that pressure from those traditional players that have been doing this for quite some time will lead me to believe that I think we have a strong chance of seeing a Bitcoin ETF approved. And if we do see a rejection, I can only imagine that there's going to be an approval quite soon, just given that there's so many out there in the queue.
And I'm sure that fear that you speak of was amplified by the collapse of FTX. But let's talk about your platform, Calaxy. It officially launched last month, and the platform aims to help empower content creator and artists, as well as help them interact directly with their fans. I heard you say in a prior interview that Calaxy is meant to be a highly consumer-facing product. Can you expand on that, and how does it work exactly?
Yeah, absolutely. So Calaxy is the open social marketplace for and by creators. We are built on Hedera Hashgraph, which is actually a blockchain alternative. But essentially, our platform allows content creators to offer digital experiences to their fan base. And so whether this is things like video calls, things like video messages, custom experiences, and more, essentially we're marrying that Web2 marketplace activity with the paradigm shift of a decentralized ecosystem connected by peer-to-peer crypto wallets. And so essentially within our application, users are able to go into the social feed or go into the general application. There's a social feed, there's a wallet, there's messaging capabilities. It's a traditional social experience or what you might come with, centered around the idea of a non-custodial wallet, enabling the power of value transfer, and which obviously supports the idea of the marketplace activity. And so we allow content creators to get paid out in either USDC or fiat currency, and consumers are able to use their credit cards to purchase experiences. And so it's meant to be a very highly Web2 facing experience, very consumer, which allows people to lean into the utility of a crypto wallet and really change the idea of what digital assets can really do and the use cases they can serve.
Before co-founding Calaxy, you held the position of securitization investment banker at Citigroup Global Markets. I believe you have spent about 4 years building Calaxy. But how did the idea for this kind of platform come about to begin with? I believe it all started when your co-founder, Spencer Dinwiddie, who is now with the Brooklyn
Yeah.
Nets, came to you for help for tokenization of his NBA contract. Is that correct?
Yes, absolutely. So shout out Spencer. He's not too far down the road from you guys down at CNBC, but starting point guard for the Brooklyn Nets. Yeah, absolutely. So our journey goes back quite some time. Spencer actually reached out to me, or to go even further. My older brother is best friends with Spencer. They're both kind of like my older brothers. Some days they are like my younger brothers. Depends on the day. But essentially, Spencer had been talking about the idea of getting his fans involved and increasing the liquidity in what would normally be an illiquid asset, which is the future earnings of an NBA contract. And so he wanted to tokenize that and sell those tokens to his community as a means of unlocking trapped liquidity. My brother understood maybe 10% of what that meant, but it sounded equally confusing as what I did for work every day, being a securitization investment banker. And so the story starts there. We were able to connect over a few things, and I helped serve as an advisor for Spencer, who was able to successfully tokenize himself. He definitely did get some pressure from the NBA. That was a big thing a couple of years back. But he definitely fell on his sword, and he was that original use case for what digital assets could do to really impact the creator economy. And since then, we've evolved into much more than just a means of capital relief for people with lucrative sports contracts. We really aim to be that ultimate peer-to-peer value transfer system that exists within the world of Web3, or that social layer that goes on top of the beautiful decentralized technology that Satoshi gifted us all that time ago.
You most certainly have been able to evolve. You've been able to raise a significant amount of capital, I believe more than $33.5 million, even amid a bear market. So, how are you able to do that, and what does that signify to you?
Uh, Yeah, we definitely have a great team. I have to first and foremost say that we have an amazing team. We have great investors, the likes of Animoca, Hedera, and all our lead investors that have been really big and supportive of the project. We could not do this without them. Just because I think when you see the general Web3 landscape, collaboration is the only means of making out the wild jungle. I mean, I'm sure you see it more than a lot of people do, but it is quite crazy in our space. And so, having a really strong value proposition, really leaning with the idea of product and the experience first, is something that we took a bit of a different approach to within the world of Web3. A lot of people really get quick into building communities, getting behind brands and hype, and not necessarily product. And so for us, I think one thing that we've done really well is that we've taken our time, really paid attention to detail, really listened to what the market needed in terms of a product that helps solve their needs. And I think that was very much so felt by our investor community and also the creators who have been on this journey for us. I can't believe I forgot to thank them, but thank the creators as well, because they've been a helping hand in helping us evolve this platform over the time, as well as come up with that cutting edge user experience that's quite unique in crypto. That makes it easy. We're the first wallet that you can install within 10 seconds on your phone. The first wallet that is as easy to send, $10 of Bitcoin like a text message, no public keys required. And so for us, I think those things and creating a product that just allows you to do things and access blockchain technology and digital assets on the chain, and move them in a way that's very familiar to Web2 audiences was quite appealing. And I think that helped us a lot.
Calaxy launched in early August. It's been more than a month now.
Correct.
So, I'm wondering, how is it going? Is there a lot of demand for this product?
Yeah, absolutely. So we're in our early days of an MVP. It's been great. We've launched on the Hedera network so far, and we're planning on adding more networks as well. The idea of Web3 is that we are, like I said, a collaborative community, and it's really important for community to stick together, especially during these times. And so as we aim to add some more support for different chains, different types of digital assets, we want to aim to be that central hub for where digital assets and the people that appreciate them can connect, interact, exchange value, and have some of the greatest experiences of their life. And so for us, we're deep back into building. The launch is amazing. It was well received by our community. We're so thankful to have gotten those people something in their hands because they've been patiently waiting for all those years. But in the future, we're really looking to expand our support, partner up with our partners, and really get the word out and create that central hub, that social layer, like we've been saying in Web3.
Solo Ceesay, the co-founder and CEO of Calaxy, thank you very much for your insight on crypto markets and your new platform.
Thank you so much for having me.